Robschild. No investment advice. Welcome to the show where we view financial markets using Benjamin Graham's investment philosophy, macro, technicals, and a touch of crystal ball gazing. Today is Tuesday, January 21st, 2025. Today's episode, tariff or not tariff. We had yields cooling off today because, as we saw yesterday with the inauguration, we were promised all of these tariffs. He was going to tariff the heck out of everybody. It sounds like maybe somebody talked to him about how, you're not exactly taking money from China by simply giving a tariff. What ends up happening is you just raise the prices of the stuff that's coming from China. And, that has, for a lot of people, it can be seen as inflationary, and at least that's the way the market is sort of seeing it, even though I don't think it's exactly that simple. I mean, on the other side of that, the tariffs help pay off the huge debt burden, with the taxes. And so, in that way, that should help actually lower yields and lower inflation in a way. So bigger point here though is, he said all these tariffs, and that's part of the reason why yields were getting so high in the first place, apparently, because they were expecting a more aggressive tariff stance, and we're not getting that yet. So interesting thing going on there. Next item on the agenda, Trump coin getting a $9 billion market cap. And me and everyone else seeing this, and it's just like, it's a slap in the face to the entire crypto community. Be like, oh, here's a coin, just like, let's make this another, $9 billion coin. Oh, and why not do a millennia or whatever her name is coin as well, and have that be worth billions of dollars. All of the crypto combined outside of Bitcoin, by the way, is worth $1.5 trillion. And the perceived wealth effect I wanted to talk about, when it comes to collective people believing they have, trillions of dollars on their computer screen. They say, oh, I have this many Bitcoin, I have this much fart coin, I have this much Trump coin, and so I have this much money. That's what they believe, and it affects how they decide to live their lives. It affects how much they're willing to borrow to pay for stuff, which, adds to the growth of credit. It increases their willingness to pay for more for stuff because they think they're wealthier. And what happens on the other side of this? What happens when fart coin goes to zero, Trump coin goes to zero, and trillions of dollars of perceived wealth disappears? And this isn't just in the cryptocurrency space. The mega cap companies having ginormous PE valuations with so much speculative value, trillions of dollars of what people think they have in money. It doesn't actually exist unless you sell, and nobody's selling. And when the small percentage of people decide to do sell and send the price way lower, and people get scared when we're on the other side of it, and no one wants to buy it anymore, and all of that perceived wealth effect is gone, the deflationary forces are going to be huge. I think we're headed into a blow up like the world has never seen. And the Trump coin is just another little piece of the story that helps the case that I'm trying to make here, which is simply that there are enormous bubbles in financial markets right now, and when they blow up, it's not going to be pretty. Last thing on the agenda, Wednesday, leading indicators index. This has been going straight down for a few years now, and somehow we're not in a recession. If we bottom out and start going up in this, I mean, that maybe that is the soft landing, but as it stands, it's still downward trajectory. But this is an important number, and we will look at that tomorrow. The daily reminders are extremely important things for any serious investor to have in the back of their mind. In my strong opinion, if you want to hear me read through them, watch Macro Update 11025 with Dominoes in the Ball. That show also explains my crystal ball readings and my portfolio. The only change from that, I think I said bear market imminent. It doesn't look like that anymore, and we'll get into the chart in a second. On to the charts. The head and shoulders top thing that we thought we had kind of failed. We also had a different parallel channel we were looking at going more down, and we popped above that, and so now we have a new channel. We have to connect these three dots here and drag it down, and you have this channel. If we pop above here and confirm higher, then the next level would be 6100 to perhaps get to a double top. And if we break through that, well, the sky's the limit, and this is why I have puts on HYG and not SPY, because Mr. Market, as crazy as he can get and as speculative as he can get and as big as the bubble can get, it can keep getting bigger. And, if you know anything about the history of the Japanese stock market, for example, or other bubbles in history, bubbles can keep growing. They can. And when they pop, let's say the S&P 500 doubles from here somehow. HYG is not going to double from here because those are bonds and they have set yields. And when credit contracts and credit spreads spread, the value of HYG goes down no matter what. It's not controlled so badly by Mr. Market. And that's why, if I'm going to be betting on shorting markets in general, I prefer shorting junk bonds with, all that has to happen is yields need to go up and or credit spreads need to widen. And it doesn't matter how high the S&P 500 is. So I can sleep good at night watching the S&P 500 go higher and higher with holding 3% of my portfolio in put contract on HYG, again, instead of something like SPY. I bring this up largely because a trader I have a lot of respect for and that I watch on a daily basis basically is Gareth Soloway on his verified investing, and he talked about getting put leaps on SPY at this point, especially at the 6100 level, and he may have already exited that position off of the rejection of it. I'm not sure. Knowing that there are leaps, I would assume you would want to hold on to them longer, but it's not as sure thing of a position for betting on a bear market, because like I'm saying, S&P 500, it can keep going higher, and then let's say it goes up 100% and then drops by 30%. During that drop of 30%, my junk bonds will for sure lose a lot of value in that scenario, and so my puts are more sure thing on HYG than puts on SPY would be. So I wanted to share that little insight there. With longer yields cooling off, I guess that might be the main reason DXY, the dollar index, got kind of a break today. Higher yields means that it's harder to borrow and therefore harder to get dollars, and that can send dollars higher. And so today, interesting. Overall in the dollar, looks like I wouldn't call this bearish or bullish right now. It looks more sideways than anything. Drill, baby, drill were the words as part of the inauguration, if you saw any of it. I'm certain that that's part of the reason why oil has been dropping, and I'm surprised that oil hasn't been dropping more and more quickly lately. It's sort of holding up better than I expected it to at this current time, and I want to keep a very close eye on it. As the price of oil, crude oil, the price of energy has huge implications. It implies how much pretty much everything costs. When a large portion of the cost of the food that you buy is the transporting of the food from where it comes from to you, and that has to do with the price of oil. So if oil's going up, everything goes up, and if oil goes down, everything goes down, and that includes yields. It's massively important market. I'm expecting it to get back down and break this line here, but hasn't done so yet. Right now the pattern is, this is a blow off top, and so, but this is the area that we're in right now, and I don't know if we're gonna keep going, higher high, higher low from here, or if we're gonna go down. Traders I listen to are convinced we're not getting above this $80 range for whatever reason. We'll see what happens. Last Friday's show, I noted how it was pretty obvious that this was not looking so bullish, wanting to get to that 5% level. It had previously looked like it really wanted to go there. Now it's not so obvious. And in fact, the more obvious pattern that I'm starting to see here, very easy to see, is, is this going to turn into a head and shoulders top and break down, past this previous trend line here? Is this could happen. This is it looks like it has the desire to potentially play out that way. Next, the price of gold getting quite bullish here. We have 27.44. This line we broke through. I can get rid of it, and so the new line that I'll be looking at is here, this double top. Are we going to break higher? And if we do, with higher highs and higher lows, yeah, I don't know. Maybe we'll get up to 3,000. Bitcoin on inauguration day. Yeah, I'm pretty sure. I'm not pretty sure. I think that a large amount of the huge move upward in Bitcoin on inauguration day was the expectation of the person being inaugurated would perhaps mention Bitcoin and, give his support of it, because for some reason the crypto community thinks that Trump is supportive of crypto. I don't. Sorry to laugh. I don't think he is. So not mentioning it in that speech. It was during the speech. It went all the way up there and then went all the way back down. And as it stands, this pattern is a double top, and so what we want to see is, the next chart pattern to expect here, since we have a little V from a double top, would be is if we were to break this low here, we could expect it to go from the double top to there, down to, again, the $75,000 to $80,000 range, which has been expected by a lot of chartists for a while now on the bear side of this. So, but we'll see. Can Bitcoin close and, comfortably above the 108,000 level in order for it to continue higher to 115, which I think is the next expected level? We will need to see it solidly close above the 108,364 level. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.